After that, you said, I'm going to go start something in the crypto world.
Not quite. So I left in let's say fall 2017, roughly. Not sure what I was actually going to do next. What I'd really done was sort of written down like 12 things I could do with my life, and felt like a lot of them were compelling, and I didn't know what was going to be best. But that, the only way to try would be to leave and just dive into some of them.
All right, so you started your own company. What
Yep.
was it called?
So Alameda Research is the first company I started up, and it was a crypto quant trading firm. And the sort of founding of it was basically, well, Bitcoin was trading on a lot of different crypto exchanges, and it was not trading at the same price on all of them. So you might see it trading for $10,000 on Coinbase and $10,100 on Bitstamp. And in theory, there's a 1% arbitrage to do there, trading those against each other.
All right, so you decided to more or less trade Bitcoin or other cryptos and take some arbitrage advantage. Yep. And it was profitable, I presume.
Yep, it was. It was a huge amount of logistical work. Like finding the trades was the easy part. The hard part was getting the accounts, sending wire transfers, opening up entities, and all of the other sort of operational work that went into actually being able to execute.
And normally when people start companies, they get venture capital money,
Yep.
and those venture capitalists own a piece of it. Did you get venture capital money?
I did not for Alameda, and part of this was, we talked with some VC firms, and our pitch was basically, hey guys, good news, bunch of 25-year-olds, we don't really know what a Bitcoin is, but we're trading it. Also, this is all crypto, and we got a startup together. None of us has run a company before, and we'd like $100 million by next Tuesday, ideally. It was not a very compelling pitch for
investors. So you got turned down.
Oh yeah, I mean, no one, people were like, oh, that's so cool, like, I hope you find success, and no one was, and so what we ended up doing was basically cobbling together lines of credit and other things from various sources, trying to sort of snowball and be able to build on ourselves.
Okay. So after that, you started another company, FTX.
Yeah.
Now, what does FTX do that your first company didn't do?
So Alameda is buying and selling. Like it's trading for its own book and, trying to do profitable trades. FTX, you can think of it as infrastructure. It's markets infrastructure. So everything that sits between a buyer and a seller. So FTX doesn't buy and sell itself, but it's a venue where people can go to trade crypto, and that aims to solve sort of every piece in between those two parties, from the clearing and settlement and custody, the anti-money laundering, know your customer policies, the compliance, the matching engine, the risk engine, the front end, and everything else.